So how was Monday?
Hey, thanks, Scott. Well, it was interesting to say the least, and I'm sure Steve will put a little bit more color on that. I mean, after the close last Friday, we kind of thought we might have a little down move, but anyway,
I
we'll
enjoyed
get to
it.
that in just yeah, we'll get to that in just a second. Welcome everybody to today's office hours. I'm Jamie Hodge with my co-host Steve Gomez. Welcome everyone. Before we get rolling here, just want to go over the disclaimer real quick and just make sure that everybody's aware of the fact that all the information that we have coming at you in these webinars is for educational purposes only. If you do need investment advice, what to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker that can legally dispense, buy, and sell information to you. We're just here trying to show you the cool features of our software, give you some trading ideas, but everything we share with you is for educational purposes only. All right, moving right along here. Always like to take a little bit of time at the top of the hour, especially since we do have a good number of people in here who might be new or might be thinking about subscribing. What separates us from the herd? Well, we're kind of a unique product. So we're in a class all by ourselves. But in addition to the award-winning technology that is Trade Ideas, we've built quite the community around the technology, which is very important and very valuable. It all kind of starts up here with the trading room, a free trading room to boot. If you've searched the web for trading rooms to hang out in, you've probably discovered that most of them that are worth their salt are not free and they're pretty pricey. Not the case with ours. It is $0.00, and you don't even have to be a subscriber to get in there and experience the trading room. So other than the price, well, I'd say the best thing about the trading room is Barry Anderson, the moderator of the trading room, opens it up 30 minutes before the open, sticks around all day, likes to talk about trading, his trading style, showcasing the way that he uses the technology, and loves to answer questions with new people as well. So if you haven't been taking advantage of the trading room, by all means, get in there and do so. Of course, today's Monday, and you get myself and Steve with office hours. Steve's going to take the reins for tomorrow on the trade of the week. And then Wednesday rolls around. We like to change it up just a little bit with the Q&A demo with our CEO and founder of Trade Ideas, Dan Merkin, along with our Chief Technical Officer, Mr. Brad Williams, always entertaining with those two. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I'll ride shotgun with him.
You're still on your first screen, you know, over there. That's what we're seeing anyway.
You don't see the TI webinars and support screen?
No, I'm seeing the first screen.
Well, that is the problem, because on my screen,
Thank you, Rachel.
the one that I'm talking about.
There we go. Now we do.
Ooh,
I see it now.
I hope that's not the lag that we have going here, because,
oh,
well,
it is a bit of a lag, it looks like.
We'll find out in just a minute. So, ladies and gentlemen, you can see the things that I was speaking about. The trading room with Barry, me and Steve on Mondays. Steve takes the helm right here on Tuesdays. Can you see me moving my mouse and making these lines, Steve?
Yep.
Okay.
Yep.
Hopefully that was just a glitch then. All right. Got my heart pounding a little bit there. Okay, and then as I was saying, Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I ride shotgun with him. And of course, our growing in popularity daily support session, which starts every weekday from 12 p.m. to 1 p.m. Eastern, designed so that you can come in there and get live help on anything TI related that you might need. So bookmark that, and I'll show you where you can bookmark that in the next slide here. And that would be right here. So did that slide quickly change, Steve?
It's trying. It's still on the webinars and support page.
Okay, it appears something is going on here.
Well, you know, when I take it over, maybe it'll clear up and then maybe it'll clean up as it goes back to you.
Okay, well, we'll just keep our fingers crossed. Hopefully everybody can see this slide. This is the URL down here at the bottom. You can bookmark that because it's always at the same location. This is hosted on YouTube. So that's where you can go to access the live trading support every weekday from 12 p.m. to 1 p.m. Eastern. All right, let's give it a shot here. How about now? Did you see that change, Steve?
Way waiting. Seems okay. Now it changed. About a bit,
It looks like
few
it's getting
second delay.
a little faster. Okay, and the bars that you can see here indicate our user growth within Trade Ideas since we launched the first AI module. All right, back in the very beginning of 2016. Seems only like yesterday, but boy, they grow up fast. The AI is now not just one module, but 3, and is doing quite well, spitting out lots of good signals based on statistical probability. And of course, no coincidence that our user base has increased since the introduction of the AI and is continuing to do so. Now, let's see if we can get a little cooperation here. As well as the AI introduction in 2016, not too long ago, we introduced Brokerage Plus, brought it live, which allows you to trade through our software, assuming you have an account at Interactive Brokers. Demo transactions as well as live orders continue to go up on a month-by-month basis, and what that tells us is that, yes, people think the same thing that we do. A more intuitive trading interface, an easier to use trading interface, also a trading interface that allows you to automate strategies that you create and or automate the AI as well. So we expect those demo orders and live orders to continue on the trend here. And since IB is currently the only broker dealer that you can connect to, well, we've still got some $0 broker dealer connections that we're working on coming down the developmental pipeline, E-Trade and Ameritrade. Which one will show up first, we don't know, but they're both getting close. So, the difference between IB and an E-Trade or an Ameritrade right now is the fact that Interactive Brokers is still charging commissions, even though they are the lowest in the field. I think free is better. So we will continue to wait for the E-Trade. I hear that might be the first one to get done, but Ameritrade hopefully will be soon to follow. All right, Steve, and here we are, the moment of truth. I'm going to kick it over to you, and hopefully by the time you give it back, we won't have any pesky lag going on here.
Work the gremlins out. Go flog your server over there. All right, everybody, welcome to my screen and my pen.
All right.
You got it? Is it looking all right?
Yeah, I see it, and it looks to be in real time. So fingers crossed.
Real time. So good. It's not a central issue. It looks like. Back to the content at hand here. Going to start with the S&P 500 ETF, the SPY, and I have a few things of note. Like Jamie said, there was a little bit of a hiccup last week, much more in the Nasdaq. We'll look at that in a second. But this is the zombie market. It just, you slap it in the face, you knock it down, it just keeps getting up and marching back towards you. Fill it full of lead, it just keeps coming back towards you. I like to jokingly call it the zombie market. And price is the most important thing. I always look at price relative to other levels of support and moving averages and whatnot, pivots and supports and resistance. But every now and then, I will kind of do a little secondary dive, and I'm kind of noticing a few things here. The volume is really tapering off as we head back higher up into these levels, which of course, as you saw, was pretty close to where we were before we dropped. But big decline in volume. But this is something, I don't know if I did this in your webinar last week or mine. I'm going to add an indicator, add an RSI. We're going to look at the S&P and the Nasdaq with RSI, and we're going to see something. It's something actually one of the first technical setups I learned back in the 90s trading commodities, because when you catch them right and you get yourself short and catch a break, I'm not saying get short here, but when these things line up sometimes, and if the markets do break, boy, they're a fun windfall. And I got addicted to that 2 to 3 day windfall profit. And this is what I'm talking about. It's called bearish divergence. And what that means is we have a slight, upward slope there, kind of flat, but a bit of a slight upward slope, meaning we took out those highs and we're flirting higher. However, the umph behind it, the RSI, the relative strength index on that first high back here, we'll call that number 1, corresponds to this little peak right there, number 2. Well, the second peak in price corresponds to this peak. And what I'm noticing is the angle is opposite. It's diverging from what we're seeing in price. So Is this a reason to get short the market? No. Is it a reason to maybe get a little cautious? Yeah, I think so. Just be a little cautious. Just be aware that when you look at the declining volume here, such as what I'm seeing, coupled with that bearish divergence, just be aware that, you know, things don't go up forever, and there could always be a little bit of an air pocket ahead. You never know. For fun, let's see how this lines up when we do it on the Nasdaq. All right, some interesting things, and I have a couple of thoughts on the Nasdaq as well. Before I get into the divergence, or let me just start with the divergence. There it is right there. All right, we're seeing it right there. You could even maybe consider that line back there as even drawing a first divergence. As the price continues to kind of go up, even to flat, it's kind of a double top there, it's all doing it with less oomph. I mean, this is a significant lower high in the peak of the RSI push. That RSI push again corresponds to this push right here. So again, bearish divergence is actually showing up in NASDAQ and the S&P. Is it a reason to get short? No. Is it a reason to be cautious? Yes. Just be aware of it, that there are air pockets ahead. So let me turn that off, and we can focus on price here for a second. I think I'm, here we go. Modify indicators. All we do is locate that RSI, and we uncheck, or we check, remove it back to our normal indicator. Look at the chart of Amazon. And this, Amazon makes up a big part of what the Nasdaq and the Qs look like. And you know, some people say that might be a double top. Well, you never know if it's a double top until it's too late. Some people might say it's a double top in the Nasdaq as well. Of course, I'm referring to these two spikes here that seem to be preceded by a lot of red. But that could be the case. But what could also be the case is we're just working on the beginnings of maybe another possible flag where the market just finds its way higher. We don't know. It's too early to tell. These are just some observations I'm having. But you know, I was noticing Amazon really got stalled out. But again, the same could be said for Amazon. This thing could just be starting to work on another bull flag, as we call it. You don't want to go counter to the currents. You know, the currents are moving stocks up, especially NASDAQ and technology stocks like Amazon. So you don't want to be a hero and try and come in and pick the top. But I did want to just at least point out we are in a period of bearish divergence, and even more so in the S&P, we're in a period of kind of declining volume. Just be aware that markets take the stairs up and the elevators down when it's time for a correction. That's all. Anything else to add? Oh, yes. I said I'm enjoying today because it'd be remiss if we didn't talk about what I've been pounding the table on for really a couple months now. But lately, the last couple of weeks, as you know, the trade of the week last week was AG and silver stock. But silver in general has just been on a 2010 type of a rip. It's probably not even being close to being over. Beautiful chart. So being along a couple of silver stocks come in was nice for the weekend, even though the market didn't do much. But lastly, before I give it back to Jamie, the trade of the week, which we're going to talk about, did not trigger today. And it was kind of a funny one because our blue line is the trigger. And if we look here on the intraday, we had a gap down, which was really curious. Well, some stupid, I use that word with a capital S, some stupid firm out there decided it was a genius time to come down and give First Solar a downgrade. More than likely, they got some desperate memo from somebody who really needed a little pullback to buy as much stock as they could on the open. Because when you see the price action buck a downgrade in the same day, it's probably going to trigger tomorrow. So the First Solar stock idea could be in play, barring this little hitch we had today. Probably should have gone through the trigger today, but when you get these ridiculous firms, these analysts that think they know what they're talking about, they're usually just doing the bidding for somebody else. But that's a whole story for another day. That's all I've got, Jamie.
Good stuff, Steve. Let me take it back here, and we will hope that there is no lag. So
all right, give me a
let
draw.
me know.
Yeah, it looks good.
Let me just put some marks up here.
Looking good.
You seeing that in real time?
Yeah, looks good. It's
okay.
Working.
All right. Well, let me know if I start lagging out. I might be able to make some adjustments over here, but I don't know what it could be. So we'll just hope it holds up here. And without further ado, let's talk about my CC window right off the bat here. Expectations. Use this little window to try to help me gather expectations as to how the rest of the market might play out. looking at these metrics after the first 15 minutes of the open. This is what I saw today coming through my large cap compare count window, just looking at stocks with a market cap in excess of 4 billion. The ones hitting highs and lows with a little bit of accelerated volume. You know, and as Steve was talking about earlier, the zombie market, you know, we got that little close on the daily below the 10 period. So a lot of people thought, hey, well, you know, this might be the pullback. After I saw these readings this morning, I'm like, okay, better late than never. You know, kind of had a preconceived notion in my head that we'd see a little weakness. Keep in mind, this is the first 15 minutes right here, 15-minute candles. And what do we do right after that? We ran straight up, went sideways, and then we took a little excursion back down to, you know, the levels that we see right here. I'm sure at that point in time, everybody might be thinking, well, here it comes, but nope, not to be had. Put that wick in, and then just it was a grind up for the rest of the day. So as Steve said, yep, it is the zombie market. No matter what you throw at it, it just keeps on going. So we're not going to fight that. Just wasn't a whole lot of use today. Short moment of glory in this 1 hour. But if you didn't take those cookies and you were short, well, the cookies went away, ladies and gents. So let's get back over here and let's talk about the AI, which was very active today. Let's see, let's count them up over here. How many signals did the Holly Trio spit out? Well, we had 5 from Neo, we had 8 from 2.0, and we had 6 over here. So a total of 19 signals between the 3, which is a pretty high trade count, considering the average number of signals, say over the last week, 2 weeks or so. And we had some pretty interesting plays in here. We're going to get to those in just a moment here. Always like to talk about a couple of different things with the Holly signals. Trying to extract some of that spread between moderate and conservative profit that we're going to see on the blotter here, and then any trade arounds that might have looked attractive. Only one of those caught my eye today, and we'll go over that in just a moment. So let's talk about capturing some of the spread between moderate and conservative here. And before we do that, just want to make sure my all trades blotter is fully visible here so we can see everything. And there we go. I'm going to sort by moderate profit here. Now keep in mind, here's conservative, here's moderate, and aggressive is way over here. All right. Quick little word about these 3 risk modes, because we got a lot of new people in here. It seems to be the case as of late. Probably just going to keep on experiencing that. So conservative profit versus moderate profit. What is the main difference here? Okay, conservative profit is the AI adhering to a strict rule set, much like you or I would do, in the form of a stop loss, profit target, timed hold. Those are the 3 main reasons why the AI can exit. And then there's 2 audibles, I like to call them, in the form of reduce risk and profit save, where a loser or a winner at the time can be closed early and not wait for the stop out, the profit target, or the timed hold to expire. Kind of like a modified trailing stop, just in case you might be curious as to what exactly the logic is. But what I like to go over here are the spreads that develop that we can see here clearly between the conservative exit and double L. And if you would have held it and ignored the AI's reduce risk exit reason, big difference between taking a $40 loss here and making 368 bucks. And a quick word about all the figures that you're seeing here. All of these numbers are geared around a risk per trade of $100 and letting the system size us up accordingly for the proper number of shares. In case we do get stopped out, then the risk will be 100 bucks, as you can see from these stops down here. Always going to be right about 100 bucks, maybe a little bit more, maybe a little bit less on some occasions. Okay, so I saw some questions fly in there. Looks like you're knocking them out there, Steve. So let's talk about this double L trade real quick here. Get my pointer back. All right, so here we see LL right here. I've already marked it up just a little bit here. Now what we see right here is the initial trade signal coming from Holly at the 22 and 18 level. And then from that point on, what happened? For the next 45 minutes here, we just got a little sideways action. Kind of getting close to the stop, but not dangerously close. How much room do we have in there? The bottom right there, 22.02. It came within about a dime, but the good news is it did not stop out. Let's also pay attention to what was going on here with the price action in the form of the green line that you see right here. That 10 period took a nice little snuggle down to the 10 period and put a bounce in. So during this little downturn right here, Holly's like, oh, not working. Think I'm going to pull the plug over here. She eats her $40 loss. But hey, ladies and gentlemen, that's why we have stop losses. If we're wrong on the bet, that's what we're willing to take and take our lumps and move on. So it's always a good idea to stick with those things. A lot of times they'll get close, but they don't trigger, and that's a good thing. So ignoring the AI stop here and just simply sticking with our guns, sticking with our original stop loss, this thing would have worked out quite nicely. All right. Matter of fact, as soon as the AI exited, we took a leg up, popped new highs. I like this pattern here. You can see what happened after the AI exit. We had an auxiliary pattern play out on top here. All right. So just keep in mind, everything that Holly is bringing to us in the form of signals is backed by statistical weight. All right. So we've got that on our side right off the bat. So if we're in the trade, stop out comes close, no dice, we're still in the trade. This nice little range break right here. The wick that was put in, what, 1, 2, 3, 4, 5, about an hour and 15 minutes into the open. That's the high, sneaks back up to that high, pushes through. So this little area right here with the arrow, a great place to add to that winning trade. And if you're new to the game, you've probably heard time and time again, you need to take your losers when they come, don't sit in them, you know, stick to your stop losses. But then when the opportunity presents itself, it's always good if you can add to a winning position, but it's not so easy to determine when that time might be. And when you can overlay a simple pattern like a range break on top of something that you're already in, that's always a great time to bolster that position. And had you done so, you would have got the majority of the move here for the rest of the day, nice and easy, all the while staying nice and well above that 10 period SMA there. So ignoring the AI exit signal and the reduced risk, good deal. And then an opportunity to add to the position and make even more on top of what you are already in. All right, we got a question about what I'm talking about right now. So I'm just gonna pause and read it real quick. What is the default percent in AI for conservative profit, moderate profit? The default percent. Okay, if the question asker is asking about these percentages, right? Is this, I'm assuming you're talking about these values over here. These are just showing you a percentage value that all of these positions are currently up or are up in real time as the day progresses. So as far as the default percent, not really sure if I'm assuming I understand the question properly. Feel free to expound on that. We can circle back around to it. All right, so next up, let me get my cheat sheet over here. We had Caper, which is the next one on the list right here. All right, glaring difference, not quite as bad as losing money and then having moderate profit be much bigger, but this one was a flat. Kind of reminds me of myself sometimes. You get into a trade, you're up, you're down, you're thinking to yourself, well, I might as well go ahead and just, you know, instead of losing money on this, I might as well get out for a flat only to see it go our way. I'm sure that's happened to a lot of people out there. And guess what? It'll happen again. It's just part of the game. But once again, if we can just obey our rule set, and that's usually what gets people in those scenarios, look at the stop level over here. Never comes close. As soon as Holly makes the entry right here at the 808 level, we get a little sideways action. But look we got our little friend down here. It's keeping it nice and tight. The 10 period doing its thing there, giving us confidence. So we got the statistical probability from Holly. We got the 10 period controlling the show here. We just got a little sideways action, not coming anywhere near our stop loss. So ignoring that premature exit signal from Holly, definitely a good thing in this case as well. And I'm go ahead and hop in here and say this. The real strong suit of the AI are its entry signals based on that statistical weight. The profit save, reduced risk, they're not the most advanced things out there, but we had to give it something to work with here. So just keep that in mind as you move forward. If that stop loss isn't getting hit, it's probably in your best interest to stick with it. But a nice big spread here between $0 and $233 based on a $100 risk. And guess what? We got something very similar to what we saw play out in the double L. We're in it with statistical probability here. Nice little consolidation presents itself. And then right here where the orange arrow is, we got another intraday range breakout, another auxiliary pattern playing out on top of the original statistically driven signal that the AI gave us. So took about 1, 2, 3, 4, 5, 6, 7, not quite 2 hours to play out. But if you could have added right here, that was a great time to bolster the position, to add to an already winning position because we're up, it's strong, 10 periods in control, we got statistical probability, and we've got an auxiliary pattern playing out as well. So a great add opportunity in the caper as well. And lastly here for the moderate conservative spread, we've got this guy, EGHT. Now this one, a little bit different, but once again, stop loss down here. This one came harrowingly close, but close only counts in horseshoes and hand grenades, right? If anything, once you see something come and flirt with the stop area that closely, and then you see some action like this in the next candle, well, you know, even if you caught it somewhere in this candle, which would have been better, but even if you caught it up here, that's a great time to add. Once you see the stop loss get tickled but not hit, and then a strong recovery or bounce, this could also be a good time to add to a position because it tried to stop out, it didn't. We got a nice higher close in these candles following a reclamation of the 10 period up here. So whether you took a chance down here and said, you know what, I get a much better price than the AI down here and take a lot less risk because we're already more than halfway there, that would have been a great add. Or once you see these stronger candles put in and the 10 period reclaimed right at the entry line, also could have been a nice opportunity to add to that position there. Otherwise, this is kind of blurring the lines between extracting some of the moderate and conservative risk, or just acting as a straight up trade around. You know, if you hadn't have been in this position and you saw the stop loss come close, well, once again, even making an original entry down here at a much better price with a lower risk sticking to the original stop loss, you know, that just makes a whole lot of sense. And once again, you know, the only reason that these plays are being brought to your attention is from the AI, which is keyed on statistical probability. But sometimes in cases like this, the timing might just be a little off, right? So that's why it's always a good idea to get yourself in the habit of looking at everything that happens with the AI, not just the original entry signals, but what picture has been painted when the AI is making a reduced risk or a profit save exit.
There's still a little confusion on how that percentage is calculated. You know, how it shows you that little window, that the percentage up or down next to above the trades.
You're talking about these moderate profit, aggressive, and percentage values as the columns?
Not the column. It's next to the drop down in the strategy trades window.
Okay.
The actual trades window. Where's the trades?
Well, this is my all trades window right here.
Okay, it doesn't have. Okay. For some reason, it doesn't look the same as mine. And I know what the question asker is trying to get at, and it's calculating in percentage terms, conservative, moderate, aggressive, and when you toggle between those three, it gives you a percentage value, and they're just asking how it's calculated.
Okay, so that's what you're talking about.
Thank you. That's what the question asker was trying to get to.
Okay. I would assume, since obviously I'm not viewing this metric very much.
I thought you might know more than I.
Well, you know, okay.
I think it's a fair way of saying, okay, so let's say if we went to a conservative profit, which is a definitive point in time when the AI exited.
Yes.
And you add up all of the shares size weighted for the percentage move. I think it gives you an aggregate total of the entire batch of those trades.
Correct.
Altogether, they're down 1%, they're up 1%, depending upon the exit. So that's the only difference between those toggles, but that value is basically an aggregate combination of all of them together weighted for the stock shares.
Correct, and notice what I did down here. I pointed it to conservative, where we have a nice little loss, right? And of course, we're seeing conservative up here. That value, as you were talking about, when you add up all the positions account, or excuse me, the amount invested in each, after it's all said and done, down negative 3.4% today, right? And then if we go over here to moderate, you'll see there's a profit, and up here, that value is, oops, I think First Solar just triggered, Steve.
It did over here.
Yeah. Okay. So that's I think we're right there, Steve. You know, risk mode based on all the capital expended on those positions, $422 on that amount of capital, 26.6%, right? And then of course, if we go to aggressive, even slightly higher. Good question. Good question. Just not a metric I really pay that much attention to, or this drop-down menu I usually have hidden there. But good question. Okay. All right. So now let's talk about Nvta, which definitely fits the trade around definition here. And Nvta is right here. Okay. So this one got off to a bang up start. If we look at the reason that Holly got out, $99 is what the AI made on that one in conservative profit mode, exiting very timely right up about here. And then what do we have? We had a little whoosh down, right? And look at that, just barely tickles that stop area, okay? These are the ones that I like to see. As soon as we get a little tickle down here and then that wick put in, and then we get a nice green candle here. So anywhere between there and the original entry line, we could have gotten a better signal than Holly. Now, you might be noticing, well, Nvta right here, profit save, right? But notice, even if it goes down and punches that stop area, it's going to freeze that amount, okay? Now, if we look at aggressive, right, this is how much, you know, you would have approximately been up, risking $100 into the close. Of course, you know, hindsight's always going to be 20/20. I'm just basing it around how it acted at the stop area, put in the wick and then a quick recovery, okay? So when you see these, you know, from a risk perspective, anytime you can get a better price than the AI and take less of a risk on something like this that's materialized, that's worth taking a stab at a lot of the times. You know, if the market was cratering and we had a big red market, not so much. But, you know, a quick reclamation of that 10 period too in the following bar. So just keep in mind, you know, everybody's risk tolerance is a little bit different. You see a wick like this, you see the next candle open. Some people might want to jump right in, or you might just want to see how it acts and get a little bit worse of a price, maybe see if it reclaims the 10 period. But even if you waited past the original AI signal on that stop out, you know, you still enjoyed a nice little run up there for the remainder of the day. So this is definitely one that I would, you know, classify as a trade around, watching the AI get stopped out. And, you know, if this was a human and this was the old days when Steve and I had to go to an office to trade, we'd call it taking advantage of somebody else's pain. You know, many times we'd hear a trader kind of pounding the table, pissed off because they had just gotten stopped out or they were just about to get stopped out. And we kind of pull it up and look at it and go, hey, well, it looks good now. You know, I'm going to go ahead and get long somewhere in this level as that guy gets stopped out. And but now you've got an AI that's trading with statistical perfection for you on a daily basis, but the idea is the same. All right, it got stopped out. How does it look now? Is the stop out going to act as a pivot point, or is it going to keep cratering through there? And let's take a look at something that kept going, because if it doesn't stick around the stop line or bounce off of it immediately, if it continues through it, well, then you know right off the bat, this is not something that I want to have anything to do with. CLB is the perfect example here. We got to close, we got a wick below it, but look what happens here. It doesn't bounce, it continues and goes well below it. So, you know, right off the bat, you're thinking to yourself, okay, if it keeps going through it, it doesn't stick around it or bounce up initially, well, then it's just a pretty simple decision. Okay, this one is clearly below, heading lower. not going to be a good trade around more than likely. But if they ebb and flow around that stop area or put in a quick wick and then reclaim a higher opening on the next bar, well, then it might be a good trade around. All right. I hope that makes sense to everyone. That kind of wraps up the Holly recap for the day. As Steve was pointing out, gold and silver continue higher. If we just kind of take a peek back here, last Monday when we talked about gold and silver, this is last Monday, gold, right? Same old song and dance with silver. Now, one thing I would like to point out that's pretty interesting here, let's just go back to a monthly chart on the gold. Squish it up. Okay. Now, this is all I got on monthly candles, and we're still not quite up to that high of 2011, but we're sure getting close. It's going to be real interesting. You're definitely going to want to keep your eyes on gold and silver. As Steve said, you know, we might just be getting started here. Not saying that we're just going to keep capping up every day. That would be nice if you're long. But one would have to think that we might get a little sideways movement before too long, but we've all got front row seats, but the party has definitely started. Handed out that top list last week on the, let's see, where did it go here? Sorry. Up on multiple time frames, showing a lot of the mining stocks and gold and silver related stocks. I'm going to drop this one in the window one more time before we leave in case anybody wants to pay attention to it. And what I've drummed up for you guys today, a little something different. We're going to do some fun with back testing and specific columns of interest, all right? And what I mean by specific columns of interest, let me pull my example window over here. Okay, this is just an alert window. It kind of looks freaky here because I've got all these position and ranges up here, everything from the intraday to the longer daily time periods. So when we back test and we right click and we bring up the back tester here, we've got all of our panels here, but we're going to be focusing on this little feature right here. What I did is I clicked in the advanced tab, all right? Now, a lot of people probably breeze right over these options right here. Columns to pay attention to, all right? Most of the time we're doing it and we're saying, you know what, let's include all columns because we want to have all potential, you know, filters listed that we might be able to go back and use to optimize the strategy. But sometimes you might find that you just want to use a certain set of filters as columns because those are your favorite columns and you want to optimize by those and you don't want to have to filter through the entire list. So let me just do a little example here. First, we're going to run this back test with all the filters being used in the back test. Boy, okay, yes, please speed up. Okay, so we're not really paying attention to the results here, which are getting kind of juicy. But if I go to other filters from within the optimization tab now, look at how many you have to deal with, okay? And it can be quite cumbersome sorting through this list to find the ones you want. It's very time consuming if we're just kind of taking potluck and scrolling through each and every one. So this is a way to efficiently get the columns in there that you think might be the most beneficial. And of course, when we're doing something like this, sometimes our ideas work. Other times what we think might be good ideas turn out to be not so good ideas. So the bottom line is we want to do this. Once we get our columns installed, and by the way, that's a very good thing to point out. To get this functionality to work properly, you must make sure all the filters are indeed installed as columns. And you know, you can easily do that by once we've added the filter, we can just go to columns and make sure that we push them from the right side over here to the left side. Or as you're going through these guys, you know, if we're just looking at filters, if you don't want to add, you can just click on it and immediately just show it as the column. So there's a couple different ways there. But first and foremost, you have to make sure all the columns that you want to use in your optimization are displayed, which we can see them here. And then we go back into the back tester and we go to the advanced tab And we just use this guy right here. Use only the columns from the strategy to optimize. Then we kick the back test into motion. All right, well, the hamsters are slow to get started today, but once they get the wheel spinning, it seems to go pretty quickly. Cue the Jeopardy music. Hopefully we'll be done in just a second. We were speeding along earlier in the day, and I guess the server maintenance is bogging it down a little bit since the close has come and they're busy updating. So close. Okay, well, we might have to kick it one more time here. Apologies for the delay. All right. Looks like it's trying to tease me one more time. Okay, so now we have it. We have a decent back test. Of course, this is with the optimization that I've done with just these filters. And now when we go to the menu, you can see it's only the position and range filters that I added as columns showing up in the optimization tab here. All right, so everything, needless to say, when I click through these guys, if I did use the filter, I didn't use all of these, but we can see I've got them all dialed in pretty nicely here. Okay, so this is just a way to focus on columns. You know, range is a big thing. So I'm thinking to myself, well, you know, let's just put in all the ranges and see, you know, see what the optimization tab shows us. All right, so, you know, just keep in mind there's a lot of different ways to slice and dice this one. You know, you could start with the larger time frames and back into it that way, or you could start with the smaller time frames and expand out that way. But this is a way to make a lot more useful or efficient use of your time, because we all know backtesting is a very arduous, time-consuming process. So if we can focus on the filters that might be of more interest to us, and of course that's going to vary from trader to trader, we might be able to get some work done a little bit quicker. So actually, I wanted to create something for you guys today in the form of a back test that is on a pretty good path here, but still has a large number of trades. In other words, when you go into the coffee shop and you're like, I'll take a large drip, please. And they're like, you want room for cream in there? Well, yeah, okay. So this back test definitely has room in it. Okay, we still got 922 trades that are coming through. We've got some decent results here. We've got an average winner and loser, which, you know, 1 penny over 2x here. So what I'm going to do for you guys today is I'm going to drop this in to the chat area. Now, what are you going to do with it? Well, remember, I just optimized by these position and range columns. So when you get this guy, the goal here is to give it to you, and then everybody's going to get busy with it, back testing it, assuming you have a premium subscription, that is. So everybody's going to put a little bit different of a spin on it. But what you want to do is you'll want to come back, and when you run the back test, obviously you keep the same filters, but since they're already pretty optimized, what you want to do is go back to using all available columns, because that way you can go through the optimization tab, see what stands out. And right now I have no idea what that might be. We'll just have to go through the list, or you guys will have to go through the list and see, now that we've got all of them back in here. But we've got a very nice base to start with. And, you know, is it going to be an RSI filter? Is it going to be the RSI 1 minute, 15 minute, 30 minute? Is it going to be a distance from VWAP? What's it going to be that stands out here once you start marching through all of these filters here? Okay, so a nice base to start with a room in the form of a lot of trades here. Got a pretty decent looking daily to start the show as well. One other little thing I'd like to point out too. I just automatically assumed that new high might be the best alert to work with this filter set, okay? However, that doesn't mean it's the only alert that might be a positive output here. For example, what if I just swap the alerts out? What if I go from new high to 25% pullback from highs? How would that backtest look? Completely different alert, not buying the highs, waiting for it to pull back 25%. Yeah, the odds maker was zooming right before the presentation started, but it's taking its sweet time now, so I apologize for the lag time here. Okay, well, the backtesting gods are just being a little finicky right now. While we're waiting for this to finish, I would like to point something out, which I also discovered through the optimization tab. And, well, I have to wait for that to come back up. Getting ahead of myself there. Okay. Also notice the very specific time window in which this thing is taking trades. We're waiting at least 1 minute from the open because we don't want to just jump in there right off the bat. A lot of crazy things going on there, but the window is very specific. And how did I find this window? Is by using the time of day optimization tab. So let's count it up here, 31 to 54. That's only a 23-minute window. That is the optimum time window to take trades from this strategy. So 1 minute after the open, right before 30 minutes is expired, you don't really have to worry about entries from this window anymore. Any entries that are going to be had that could possibly adhere to this statistical data set are going to roughly be in the first 30 minutes, roughly speaking, 8:31 to 9. Shave off those top 6 minutes, get rid of the opening 1 minute. But basically what you have is pretty much a 30-minute period there where this alert and sequence is the most productive. Okay, so this is the back test, and with the alert that we swapped out, instead of new high, 25% pullback from highs. So, you know, whether you're buying the highs or whether you're buying the pullbacks or anything in between, what that's telling me is this scan looks pretty strong thus far. We got a lot of trades here. So when I drop this link in, all the settings are going to stick. And then you guys will have a nice base to get in there and play with and see if you can improve upon it using all the filters that are present in the suite of trade ideas filters. So what I'm going to do here is I'm just going to swap this back to new high, position and range optimization, work in progress, and I'm going to drop this into the chat panel. All right, so that window should be there now in the chat panel. I'm also going to drop the up on multiple time frames topless window in there again for these metal stocks, just in case the trend is still going to present itself for the rest of the week, but we'll see here. And that second one is up on multiple time frames, metals. And I was perusing the history of that top list, and boy, a lot of good swing trade candidates came through there. If you go back and look at the history, starting Tuesday of last week, a lot of good trading opportunities in there, whether you're buying the highs on those or pullbacks as well. So here we are with about 8 minutes left, and that's about all the material that I have for today. So any questions before we kick it back over to Scott and let him walk us out here?
No, all good.
All right, very good. Well, Scott, if you're ready to walk us out and let everybody know how they can save a little bit of money on a new subscription or an upgrade, we're ready for you.
Great. Yeah, thank you. A couple items. There's a really helpful ebook about how to use earnings season to your advantage. It's free. Go to trade-ideas.com/earnings and put in your email address to get the download. It's got a couple of cloud links in there that you can plug into your layout to go along with the information. There's a podcast. We've got some interesting ones up this year already. Search for Trade Ideas Podcast wherever you listen to your pods. Use the code summertime, save 15% off your first month or year of trade to upgrade and save as well. And if you have any questions at all, just email us, info@trade-ideas.com. That goes into our help desk software, gets you the help you need as quickly as possible. Steve Gomez can be found on Twitter at Today Trader, and Jamie Hodges at QuantBot. And Trade Ideas Pro is the Facebook handle to follow and like and share everything with your friends. The recording of this session will be up later on tonight or tomorrow, and you get an email reminder tomorrow from GoToWebinar with a link to the playlist where you can find it. Thanks, everyone. Thanks. Jamie,
Thanks, everybody.
thanks, Steve.
We'll see you on the flip side. Bye-bye.
Bye.
See you tomorrow.